This video is all about margin, what it is, why it's important, how to calculate it, and more importantly, how to find it within the Interactive Brokers Trader workstation. Let's do it. So what is margin trading? Basically, the easiest way to define it is that you are borrowing money from a broker to buy a stock. For example, if you borrowed $2,000 to buy 50 shares and you put up $2,000 of your own cash to buy 50 shares of stock, you are buying on margin, and then you have different set of requirements you have to maintain in order to open and hold this position. Now, there's two different types of margin. There is initial margin and maintenance margin. And to go for those, let's check over here. These are definitions. Okay. Initial margin. It is the deposit margin when you go to open your position in your portfolio. It's the initial margin required to open that position. It is normally 50% of the purchase price for whatever you're buying the stocks. And it is what is initially required in your account to be able to open that position. If you don't have 50% of the position in cash in your account, you will not be able to open up the trade if it is the regular 50%. Now, once you open that position, you have what's known as a maintenance margin. And this is the requirement that you have to have in your account at all times while the position is open, and the minimum amount of equity that you need to post-purchase keep the position open and alive. And we'll show you how to calculate that in a second, but it differs per stock, per share, per company. It is all available to you in Interactive Brokers, and I'll show you how to calculate it, how to find it as we go through this video. Inside Interactive Brokers, you have your main portfolio screen here with this area in the margin in the top right for your portfolio. You have three things you need to pay attention to up here. You have your net liquidity, which is number one, the total value of all your assets marked to market. So the total value of what you have. You have your excess liquidity here as well, which just means it is the amount of equity that you have as an investor in excess of the current margin required to support your portfolio. And then you'll see you have the maintenance margin, which shows you the maintenance margin or the maintenance level you have to have in your account at all times in order to avoid what's known as a margin call. Now, to click this account button here, pop it open to get more information. We can see here, we can open up these different things. If they're not open here for you, you can open those up, right? It's going to show you those same numbers here, just broken out with the balances, net liquidation, equity with loan, your cash position. You're going to see your current initial margin and your maintenance margin, and your available funds, excess liquidity, and your buying power, which is the amount that you can trade up to if you were to use all of your margin requirements. Very quickly here, if you want to hover over these items, you can look through and see the actual calculation. It'll show you a little bit more text about what they are and what they mean, and give you a little bit more idea of how they operate. So how can we figure out what the impact of buying or selling shares is going to do to our account? Well, if we go into this position here on AMD, let's go say we're going to buy some AMD stock, and we're going to buy, and we're going to do a quantity of 100 shares. If we click this advanced tab here, it's going to pop up. We can go to check margin for this position. If we check margin, the margin checker box comes up. And what we want to look at here is the bottom right-hand corner. It's going to show us our current change in post-trade margin requirements. It shows us our equity with loan value. It shows us the initial margin in our account, the maintenance margin as well, and showing us our position. After we make this trade of buying 100 shares of AMD, we will have to have another $3,300 in our account at all times in order to maintain this margin. Okay, which means that post trade we're going from $200,000 or 199 to 203, which means we're upping the requirements of our margin in our portfolio by roughly $3,321. This makes sense because we're buying 100 more shares of AMD, we're adding it to our account, and it just means that we're making the amount that we have to have in our account greater, which means our account has to always have at a minimum $203,000 cash value in it. If the value of our account drops below this, we will get what's known as a margin call. If you want to see the impact of anything in your portfolio right now that has on your margin account, you can right click and go down, financial instrument info, show margin impact, and a little dialog box will pop up showing you that your equity with loan position, your initial margin again, and the change if you were to close out your position, if it would add or decrease your margin requirements. Now, this one, if we close out this position and sold off those shares of Airbnb, it would actually add to our margin position. If we wanted to go back and look at something else, maybe a put, if we have a put in here, we don't have any puts. Let's look at this Microsoft call or Amazon here. Same thing. Okay, so if we sold off our shares of Amazon, we would drop our margin requirements greatly in our account. and we would have a post-trade margin of 118 versus a current margin of 199. So selling off those shares would greatly reduce our margin requirements for our portfolio. Now, to find the margin impacts for any particular stock you might be looking to trade, if you go and right click on them, let's do Meta here and go down to financial instrument info again. We're going to open up this dialog box, go to description. Another window is going to pop up and it's going to show you right here the initial and maintenance margin requirements for this company. Now, why is this important? Well, it's telling you that if you buy 100 shares of Meta or buy 1 share of Meta, you have to have 30% of the cash value in your account at all times after you open up the position in order to have that be available to you and not get a margin call. This will differ between different companies, different volatility in companies, but generally it's 30%. But the more volatile the stock, the larger the percentage required will be. Let's go over a quick example and show you what the calculation would be for triggering a margin call when the broker would then go in and liquidate your account in order to bring it back within the margin requirements. So in this example, an investor deposits $12,000 into an account and borrows $12,000 with a margin loan. So $24,000 total worth of stock can be purchased. If the broker's maintenance margin is 25%, we just saw with Meta that it would be 30% in that case. Let's do 25 in this example. If the account value drops below that 25%, a margin call is triggered and the brokerage that you use will go ahead and sell your positions off on their own to bring it back within the margin requirements. So you have a $12,000 margin loan. This is the calculation, whatever your margin loan is, divided by 1 minus the margin percentage of 25%, which gives you the calculation of 16,000. And we look down here that we have to keep our account above 16,000 or we get a margin call. This is how it works out in a calculation. So you deposited $12,000 worth of funds. You borrowed 12,000 as well for a total of 24. Your margin requirements is 25% based on this calculation again, right? It's margin divided by 1 minus the percentage. You have to have an account value of $16,000 at all times after you open that position. Otherwise, the margin call will happen. And going by what you bought, if you bought $24,000 worth of stock, you would have to decrease from 24,000 all the way down to 16,000 in order for you to get that margin call, assuming this was your only position in your stock. Now, to see the overall margin requirements for your portfolio in a different way, there's a really cool tool in Interactive Brokers. I'm going to show you how to do this. So if we go into new window here, we go down to portfolio tools, we go down to risk navigator, you can open up a what if portfolio, and this is going to allow you to see your margin requirements across every position in your portfolio in a risk decision. It's going to ask if you want to pre-populate with your existing positions. You say yes, and a new dialog window will pop up. We're going to go okay. So what you'll notice is a net liquidation value here in the top left, your initial margin and maintenance margin requirements, as well in all your positions for your underlyings in equities, bonds, Forex, commodities, anything else you have structured projects. To see the margin sensitivity or the margin requirements, go here and open up this part of the window. Here you will find every single position that you own, the margin impact right here, the interval, and you can see that 30% is the general maintenance requirement for your calculations that we just showed you. Aside from Tesla at 40%, everything else is 30% maintenance margin requirement when you're doing your calculation. It also shows you here in the maintenance and initial, if you were to close out that position, the impact that it would have on your overall portfolio. And there is a quick snapshot to see how much margin is being affected by each position in your portfolio. But the bottom line is, if you don't want to take unnecessary risk, don't use margin. It is for advanced traders who understand the requirements and how to best use it. And even sometimes they still make mistakes. So if you're a beginner, I advise you not to use margin. I got burned on it myself a few times as I started out. And I just don't want you to make the mistakes that I did, where you get the margin call, your life kind of comes crashing down, where the brokerage goes and liquidates your account. So that is margin impacts for you in Interactive Brokers. I hope you guys got some value out of this video today. If you did, consider liking and subscribing to the channel and following along for more content on Interactive Brokers, stock investing, stock options, and anything else financial related.